investment trends during the bear market, changes and obstacles.
All right, welcome everyone to investment trends during the bear market. Is it a bear market? Maybe we'll talk about that. Challenges and obstacles. I'm Gordon Einstein. I'm your happy moderator. I'm attorney from Los Angeles. And yes, that last panel was very good. I thought very interesting and on point. I always do this. So before, lean forward so I can see your happy face. Before we dive into the topics, why don't you both introduce yourselves, say who you are, what you're working on, but also give us a little bit of background and context about yourself. Because, every superhero has an origin story. Wonder Woman, Batman, Wolverine, there's always, how you became involved in crypto and blockchain, or how you became involved in investments and everything else. Just let us know about you. So please.
So I'm really glad that you asked us to set the context like that, because it's very easy just to dip in and then people don't really know who they're talking to and why they have the perspective that they have. So Moderator Venture Studio.
Who are you?
I'm just getting there.
Okay, I'll be quiet.
Give me a chance. I'm setting the scene. How long have we got, by the way? 10 minutes? Oh, right. Okay, thank you. So Moderator Venture Studio is a venture studio. Most people don't know what a venture studio is. The way to see it is like venture capital, but super hands-on. Comes in a bunch of flavors because the model has not been standardized, although it has been around for nearly 30 years. It arose in response to perceived failings in the VC landscape, although, like I say, it is an extension of that. Now, our preferred model, is to create value directly by creating startups ourselves. Other venture studios will work with founders. They'll have these really cool accelerator, incubator programs. And we do have a standardized process for taking an idea through to a profitable business. But in effect, we are the founders in our venture studio. Our team of seasoned entrepreneurs, investors, and professionals work together to validate propositions, turn them into businesses, and then scale them. And we've recently set up in Malta, which is why this location is very much of interest to us. And the interest is to hear.
Can you talk about that for a minute? Because
sure.
I love hearing about different jurisdictions and why.
Yeah.
So just if you don't mind, just dive into why Malta.
Absolutely. So our chief operating officer is Maltese, and she's been a flag bearer for the amazing things coming out of this jurisdiction in terms of, because obviously it's known for everything that's going on around here, which, as we can see, is a thriving industry. But what is less known is the accommodative and forward-thinking regulatory landscape. They were the first to come up with virtual assets regulation. Some of the MiCA regulation followed a lot of what was tested here, for example. So Europe follows Malta sometimes in certain aspects of some of the regulatory policy that gets developed. Also, the innovation infrastructure that's here, constantly coming up with accommodative and, should we say, responsive approaches to supporting the startup ecosystem. And of course, you've got access to support via Malta Enterprise, which is the innovation authority here, which supports startups. So when you combine those three things and our COO's deep connections within the ecosystem, it just made sense to have a presence here. It's an unfair advantage that we have. So we work with some of the startups that are developed in the UK, and we internationalize them here. And so one of our specialties is internationalization, helping startups.
I was about to say, this is not an American accent.
No.
Good for you.
Yeah.
Okay. Our other panelist, Mr. 𝐾𝐨𝐬𝐬.
So I'm 𝐾𝐨𝐬𝐬, and I live in Dubai. I've been in the world of blockchain for the last 10 years. And having been in the industry for this long, some of the things that I noticed is a list of challenges more than the solutions. And to fix that, we started our accelerator in Dubai called Key Difference and an associated venture capital fund. In 10 years in the blockchain space, I have been a marketer, an investor, and founder of companies on the media side and played all the roles. So taking this knowledge and making that work for startup founders through the accelerator and the fund is our objective. And in the process, making the Web3 space have more and more value move from the Web2 in a qualitative manner is one of the prime objectives that I have, so that the space is cleaner, neater, and better for the days to come.
Interesting. And maybe go a little bit more about your background. How did you come into all this?
Sure.
I don't know if I heard that.
Yeah. I started my business when I was 14 years old, and it was a nightmare. The systems and the processes, corporations, everything that existed were not friendly for someone who was starting something outside of the regular way of doing things. So I was working with some companies who were in the gaming space, and they wanted to use Bitcoin. And I didn't know what Bitcoin was back in 2013. I started to dive into it. As a content marketer, it was important for me to understand what I'm talking about. And when I did dive in, I found that this is exactly what I wanted to be and do. This industry's philosophy, more than the technology, matched with me. So I always say that the industry of blockchain is philosophy first, philosophy of choice, giving people the ability to choose what they want, centralization or decentralization, ability to do the way that works for them, private or keeping everything public. So that choice was something that I fell in love with, and I continued to spend 10 years in this industry to bring all revolution in different spaces to life.
Love it. Now, you both kind of alluded to something I want to get into. There's accelerators, there's incubators, there's venture capital funds and venture capital studio, and that's kind
Close.
of
Venture studios.
studios. It's an interesting ecosystem that, if you ask me, I couldn't quite tease apart the lines between them all. Let me start at this end, because I think you're more the incubator accelerator track, and I think maybe you're more sensitive to the venture fund versus venture studios track. But then we'll go back and forth. Okay, so explain it to me like I'm 5. Accelerator versus incubator.
Okay, so when a founder has nothing but an idea, they have no idea what to do, where and how, and incubators can come into place. They provide you every infrastructure, physically, legally, in terms of people and basic team that you need, support you and help you cross the bridge to set your company and go live. Whereas an accelerator takes a company when they're at least a few steps forward. They know what the idea is, they know where these guys are heading, but they have no product and they don't have anything put on paper, but they have some conceptualization. And then accelerators take them from there to the next step, accelerate them to the next nearest objective. It could be fundraising, it could be a launch, it could be an MVP, etc. But in reality, the industry do not have a set terms for any of this. They're used interchangeably a lot. So accelerators do incubate at times, and it's vice versa. So it's a very, very fluid one, including that goes the same for venture building and all of that as well.
Okay, and is there an implied or implicit pipeline from incubator to accelerator, or is it just whatever happens to happen?
It works. So incubators do send projects to the accelerators when the time is right, and accelerator can also send it to another accelerator, because there can be an accelerator for early pre-seed stage, and there can be one that takes them towards a Series A. So based on the stage of the companies, there can be multiple pipeline and multiple entities involved in the process that lead a company to the last step. And even within the accelerators, there can be a tech-focused one and a marketing-focused one, and so on. So there can be multiple accelerators playing a role in helping a business from one point to another.
Let me switch to Osmin. You dropped a beautiful nugget in there that I want to explore. You said that the studios model is somewhat a reaction and correction to flaws or perceived flaws in the regular venture capital structure. I'd love to hear more about that.
Sure. So venture capital generally positions investors in somewhat of an awkward sort of situation, in that investors are expected to be able to base some of their investment decisions on lived experience as if they'd already run businesses themselves. And what was often happening was that some of the investment decisions just were not yielding the outcomes that were expected in terms of returns, and was the first thing. The second thing was that once the money has run out, that, let's say, a beneficiary of investment has received, and they've got a certain amount to provide them with a runway, and then they get to the end of that runway, they're kind of stuck. Same thing if they've been through an accelerator program. What happens then? the ongoing process of growing, evolving, and commercializing outcomes wasn't being very well supported because going back to the starting point, venture capital investors didn't have the sophistication derived from direct experience of running a business to support the startup founders with that longer term onward journey. So they're thinking in terms of, 12 months, 3 months, 6 months. Actually, you need to be thinking in terms of 3 years, 5 years, 7 years, and beyond in some cases and sectors, depending on sort of what your investment thesis is. So the venture studio was born as a response to that. Number two, I've written a LinkedIn article about this. There's this term, ergodicity, that...
Ergodicity?
Ergodicity, yes. And it is a term which relates to, it's a statistical property which talks about the outcomes of a process being, should we say, attributable to the random distribution of that process. What that means is, imagine you've got a big bag of sweets of all different colours and you want to count the red ones. Well, you could empty the bag and count them all, or you could just keep grabbing handfuls. And the ergodic properties of that bag of sweets tells us that pretty much you'll get the same number of red sweets every time you grab a handful. Now, that's what ergodicity is. Venture capital and Silicon Valley is not ergodic because what happens is they are looking for the treasure, that unicorn, that billion-dollar company, maybe $1 trillion by now. And they invite many people who have hopes and dreams, aspirations, founders, to help them to find that treasure. The benefits are not randomly distributed. They accrue to a very, very small subset of those who are involved. But with venture studios, the way it works is we all, as the founders, put in that skin in the game, that initial effort. Then we only bring other entrepreneurs to join us when we've already got a sense that we're onto something. So anyone who works with us has a share in the outcomes, assuming, of course, we've done our job properly and we can actually create a company that delivers sustainable revenues.
I think we can do a whole show on this.
We can certainly
do a whole show. I just want to keep it going, but
yeah, absolutely.
This is fascinating just because of the time. But
yeah, sure.
I think I need you on my show.
Absolutely. I just want to say that we're raising a fund. So we're not actually at the stage now where we've got the 50 million that we're after. So if anyone is interested in clean tech, emerging tech, then please see me because, as I say, I'm raising right now.
You heard it here first. Okay, so are we... Short version, are we still in a bear market?
I think it depends on how you see it. If you're looking at it from a trading perspective, probably you're just coming out of the bear market. But if you looked at it from the way the technology has been developing in the last 3 years, I think we had more progress in the last 3 years than any preceding 7 years before that. So from a tech standpoint and from progress, organizations adoption of it, I wouldn't say we are in bear market. It's not like everyone abandoned the ships and went home. Businesses were progressing, companies were building, and there has been funding to support that as well. Just not the bull market rush of money being thrown apart, but in the right places, money has been raised and companies have been progressing. So yes, from an investment point, it has been a bear market, but I think it's coming to an end sooner than later. But from a business and tech standpoint, I don't think this was anything close to the previous bear markets we have seen.
I think I'm a lawyer in this space. I think some projects washed out and some things may have slowed down their funding, and the way of compensating people with tokens got less exciting because what's going to happen with those tokens. But I also saw that, like you said, that I saw the technology strengthen and a lot of silly use models get thrown to the wayside, and people got a little bit more hardcore and serious. And there are less yacht parties, more time with the keyboard. So maybe that's a good thing.
Yeah, it is, because anytime you have such markets, you get all the loose hands go away, and it's good for the market. If you just have this bullish times, and I can tell you, the moment Bitcoin goes to 40 or 45K, you'd have all the shit again. The meme coins will be the most important coins in the market.
I'm ready. I'm ready. So please, what's the status of the market? Are we still, from your perspective, are we still bear market? Are we accelerating out? Were we in a bear market?
Which market are you talking about? Because I'm
talking about whatever market is in the title.
Right. Okay. Well, unfortunately, there isn't one. But I mean, if you were to look at crypto, I mean, crypto it's a false market. I'm sorry. I don't care what anyone says. It's not a real market. It's heavily manipulated. So I don't tend to focus on crypto. I'm really interested in lots of the activities that are happening outside of the space. People are taking their profits and looking outside of the crypto market to actual markets that deliver real utility. Most of the things that arrive that we are using right here and now came here on a ship. Most of the things come from the physical, everyday sources of industry that create the products and services that we use around us. Those markets are where a lot of the capital is flowing to right now, because in times like this, whatever we call a bear market, we have to accept that the macroeconomic environment is not conducive to.
Can I ask my question better?
Yes. Yes, you can.
I'm under the impression, may I?
Yeah.
I'm under the impression that the past year or so,
Yes.
VC funding seems to have dried up relative to before.
Yeah.
I'm under that impression, even separate from crypto.
Yes.
Is that an accurate
Yes.
statement? Fine.
In a way.
Okay, so let's say that's the bear market. Thank you for helping me tease this out.
Yeah.
Is that evolving?
Sure. I mean, it's a cycle, right? Loose hands and all that stuff, absolutely. But we have a scenario where capital needed to be deployed. Profits have been taken. You've got to have an exit sometime. Exit's happening, and now we're ready for the next phase.
Okay, so we're something happened, and now we seem to be sliding out of it.
I think so.
Luckily, happily. So what do you kind of give me a view of the next 3 years? You know, assuming we're in a super cycle, where's the money going to go? How are the trends going to evolve? And what do you dedicate to making happen?
So what I'm seeing a lot of are people who are interested in, and you're going to hate this because there's a lot of kind of startup in a sort of fervor, and I am a big proponent of startups, but a lot of people are looking for boring businesses. People are looking for existing businesses that have been around for a long time. But what you can do, and what I'm seeing a lot of, is people buying failing businesses and turning them around, and taking some of the skills and techniques used for developing startups and actually applying them in existing environments and sectors.
This is sort of a private equity play.
Yeah, sort of. Yeah, and actually private equity, I think, is going to attract a lot of attention, and already is. So it's a good point.
I think from the crypto and blockchain side of things, the investment is moving towards real world assets. More and more businesses are tokenizing themselves and securities as well. So a lot of venture capital money is going towards the infrastructure that deals with that. And there is also a growth of business as a service or blockchain as a service, where a lot of individual entrepreneurs cannot afford to create their own blockchain platform to run their business if they're coming from the traditional Web2 space. So like SaaS, blockchain as a service, would enable them to move a part of their business, maybe a critical or non-critical part, to the blockchain world and run it from there for the transparency, accountability, or any benefits that they deem useful for them. And this is a huge revenue generating business for anyone who's putting this out. So these two, I believe, are major trends that will happen, because as you notice, the business that cannot sustain itself with revenues are not going to last. People have seen that over and over. And of course, there might be some money going there, but in the upcoming months and years, at least for the next 2 years, I see that self-sustainable businesses, those that are not connected to Bitcoin speculation, are the ones that will have most impact, and the infrastructure, obviously.
One comment and then I'll pass it over. I'm not sure. Look, I'm not Mr. Tech guy, I'm Mr. Lawyer guy, but I do code and program. I'm not sure we need more blockchains. I think we need the blockchains we have to be developed and good bridges to come into place between them. Good, fast, efficient, secure bridges. I mean, do we need another Ethereum knockoff, or can we just make it better?
I think we have everything that we need from a tech standpoint. We don't even have the blockchain trilemma of issues with security or scalability or decentralization anymore. We have all of that. What we need now is real businesses moving on chain, building on chain, using what already exists, not a new blockchain, not a new technology anymore. Improvements can happen, but not at the cost of not bringing a real business on board.
And Osmin, we're going to give you the final word. Go for it.
Thank you. Yeah, on the sort of the blockchain side of things, I'm seeing a lot of interest in R&D. So partially to your point, a lot of the economic activity that people thought would materialize hasn't. So a lot of people are going back to the drawing board to say, okay, what is it that we haven't done to attract the economic activity that should happen? And I see a lot of work behind the scenes to address some of the issues that prevented the economic activity that actually proves out the technology from happening. And I see that perhaps there's going to be a new wave of activity in the next few years.
I can give you another last word. Where do you see those gaps as being?
Ooh,
I know that's a tough question. I know we're out of time, but you're right. I mean, but I think, where there's a gap, you got to do gap analysis and maybe see where we're missing. Do you have any either one of you actually?
Sure. So infrastructure tooling is a big part of it. Yeah, I'll just give one.
I think the new trilemma is the user onboarding, user interface, and user value. I think these three are the key factors that will change right now.
Great. Okay, we're over time. I just want to get that because that was really interesting. All right, let's give a big round of applause, please, for our wonderful panel.